Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we got the markets back open, and what's going on? Well, they're down a little bit, just a little bit. Dow's down about 100, Nasdaq's down about 100. But let's talk about this month. This is the last trading day of the month, and this October is the best month for the Dow Jones Industrial Average since 1976. 1976. Well, I mean, that's like 40 years ago, right? Okay, so it's the best month. Now, here's the thing. The Dow was up about 15% for the month. But the NASDAQ was actually down for the month. Now, so you got a tale of two markets, and the Dow definitely leading the markets higher. The NASDAQ's holding the markets back, and the S&P somewhere in between. All right, so you got the Dow Jones down only about 10%. 10% for the whole year, right? The S&P's down about, well, it's down about 20%, and the NASDAQ's down about 30%. Now, what's going to happen going forward? Well, a lot of people think we've already made the bottom in the stock market. They think that we've hit that bottom and now we're going to push higher. Now, they could be right. A stock market tends to bottom when inflation has peaked. Now, a lot of people think inflation peaked right around 9% and it's coming back down now. Now, I do not believe either of these. I don't believe that we've seen the peak of inflation. Yes, I believe we will come back down a little bit here, but then I think inflation's just going to run rampant. And I don't think the stock market has bottomed yet. I do think we're going to go back down and retest this bottom. We'll see how that plays out. Now, right now, the market is clearly on this tear up, right? It's on this big uptrend. I mean, the Dow Jones just in the last 3 weeks is up 15%. 15%. That's incredible. Now, will they push it to new record highs before the end of the year? It's possible. I'm not saying that's not going to happen. I'm saying that I do believe we'll come back down and retest the lows. I do believe that. We'll see if that plays out. Now, I'm sitting on mainly cash. I'm over 90% cash. It's very small short position on, but I'm not convinced that it's going to go, the short position is going to work out. They may run this market up to new record highs. We'll see how that plays out. All right, let's move over to the real estate market. Now, over the weekend, I do what I always do. I read articles, and one of my favorite articles was in Yahoo. Now, Yahoo, they say this is the very best time to buy real estate, to jump into the market. The exact quote, very best time to jump in, to buy a house. Well, if you believe Yahoo, you can run out there and get the house, right? Okay, so Yahoo is saying that, well, now is the best time because there's so many deals. Look it, we've been slumping for 8 months now in the housing market. It's been slumping downward. So a lot of the big expensive cities have started to come down. Many of them are down over 10% already. So they think that this is the good time to go jump into the marketplace. They have no fear. They think that this is nothing like 2008. Now, they'll tell you it's not like 2008 because we have no inventory. So now is the absolute best time to buy. Okay, well, I mean, you see, it sounded like a realtor wrote this, right? I Googled the name as Amy. I forget her last name. She wasn't a realtor. She was just a journalist. She went to Western University and has her degree in journalism and is a contributing writer to Yahoo. Now, she's saying that, well, that the home seller is not in trouble and that this will be the bottom that we're at now because the home seller does not need to sell because they have so much equity. They have so much equity in their home. And the reason they have all this equity in their home is because that we were able to save the housing market with the forbearance program. A lot of people started to get in trouble, but the delinquency rate, and she is correct, the delinquency rate, it's running and about 2.5% of homes right now are delinquent, where she points out that when 2010, at the bottom of the last subprime crash, that the delinquency rate was actually 11%. So 2.5% is nothing. But what she doesn't realize is that we haven't started the delinquency process yet. The forbearance programs are actually, a lot of people are still on a forbearance program, and she claims that these programs worked. Well, maybe they worked, they delayed, they kicked the can down the road, but these people that are on forbearance that haven't made a mortgage payment in the last, well, let's call it 1.5 to 2 years, they haven't been paying their mortgages, they're losing equity because the cost is being tacked on at the end of the loan. And eventually these people that are still in the forbearance programs will have to start paying. And a lot of them can't afford to, so the delinquencies are starting to go up. The court system is backed up because they're starting the foreclosure process, and the foreclosures will hit the market, which will bring on more inventory. Now she says, well, we have this $11 trillion in inventory. Okay, maybe we do, maybe we don't. Now, she also really fascinating, since we are at the bottom, since this is the very best time to buy, well, the equity will only go up from here because home prices are going to go up from here. They're not going to come down. I love reading this article. Now, I really appreciate you guys. I don't tell you that enough. I'm very honored to have this YouTube channel, but if I didn't have you guys to talk to about this, I'd drive, well, the few friends I still have, I'd drive them crazy. Well, I totally disagree with everything she's saying in these articles, right? Okay, look at the equity. It's coming down. It's going to be wiped out, right? It's going to go away. Now, okay, she doesn't get that there's no inventory, but if there's even less demand for houses, the demand shock for houses, when we went from 3% to 7%, the demand is just falling off the cliff. So yeah, there's limited inventory, but if the demand is even less, it's going to come down. You see, houses, they're priced on the margin. If one guy has to sell, he's going to bring the whole price structure down in that neighborhood. Now, look, I do agree that we're still in the good times. These are the good times right now. Now, people think these aren't the good times. These are the good times. You can still get within 10% of what Billy Bob sold his home for. Now, Billy Bob sold at the absolute top. Billy Bob, he got out. Now, you can still get within 10% of that if you sell now. Now, a lot of people, I'm hearing this all the time, a lot of people are griping right now. But Mike, my house, it's on the market. It's taken like 30 days just to get an offer. Look, 30 days is really fast. Do you realize that the average, if you go back to historical norm, is about 6 months, and I think we're going to hit that again. Right now, let's say you can get an offer in 30 days, but that's not normal. These are absolutely the good time. Look at the layoffs. The layoffs haven't started yet. The recession isn't even here yet, according to Washington. They'll tell you we're not in that recession yet. Okay, maybe we're not, but it's coming. The layoffs are coming. The jobs announcements. Major companies are announcing mass layoffs already. Now, these are still the good time. Look, if you work at Google, Facebook, and Apple, and you're making like $300,000 a year, and you get laid off, these are the good times. You can still go out there and you can still get a job working in like a nice restaurant, right? Something like McDonald's or Wendy's. And so, but you can still get a job. It's not like the bad times yet. The bad times when you get laid off, there's going to be no jobs. Look at the recession's coming. The layoffs are coming. This is not the best time to buy a house. Now, anyone that listens to this article, and goes out and buys a house based on what she says, well, maybe they deserve to lose all of their money. I'm telling you, we are in the first inning. We're in the first inning right now. This has a lot of time to play out. You will not see this play out until the layoffs come and the unemployment number is going to skyrocket. There's going to be over 1 million people laid off in this recession. I promise you that. Over 1 million, maybe as much as 3, 4 or 5 million people getting laid off. Okay, now these people are white collar people. They're people that are making the high income. These are the people that are buying the homes, and they're not going to be able to afford their mortgages. When they can't afford their mortgages, what happens? It goes into foreclosure, or they just hand the keys back to the bank and they walk away. This is inventory going to be coming onto the marketplace. This is not done yet. This isn't going to play out. Some people think this is done. Some people think this is the bottom already. I disagree with that so much. I'm telling you, I just do. Anyways, that's what I spend my weekend reading these articles, and then I have all of you so I can come and talk about it with you. Now, leave me a comment if you think we are at the bottom of this housing market and we're only going to go up from here, and that equity is only going to start to increase. I'm telling you that equity is decreasing, and it's decreasing at a faster rate. The equity is going to go away. People are going to be underwater. Look at the people that bought in the last 2 years that put 5% down. They're already underwater. Yes, we've had that big run up in the last couple of years, 20%. But now we're on the other side of the hill and we're starting to come down. Now, we talked about how this is going to bottom out when the unemployment numbers peak and they start to come down. Now, one of the comments in the comment section, which I totally agree with, it was a comment by, well, his name is Lizard King. Goes by Lizard King. Now, he says real estate bottoms when gold peaks. You're better off if you want to buy a house, right? You want to buy a house and you're saving your money to save in gold instead of saving it in dollars, because the dollar could crash. Right now, the dollar's crashing with inflation. It's losing about 10% a year, 10% a year, 10% a year. Now, gold hasn't taken off yet. Gold is a bargain here. But anyways, at some point, when you see gold come to the price 1-to-1 with the Dow, that will be a time to sell your gold, to buy a house on the cheap. The bargains will be out there. I'm telling you they will be, but this is going to take a lot of time to play out. But my gold could never go 1-to-1 with the Dow. It's done it twice already. Did it in 1930, did it in 1980, and it's going to do it again. 1-to-1 with the Dow. Now, will the Dow, okay, look at gold trading right now, 1650, right? The Dow trading 33,000. Now, is gold going to jump up to the Dow? I don't think it's going to jump to 33. No, I don't. Is the Dow going to come down to gold? Oh, it's going to come down a lot of that way. Probably down to about 6,000 when the crash comes. Now, I'm going to get a lot of hate comments for that because people hate when I say that. The Dow is going to lose about 80-90% of its value. It's just when the big crash happens, it's how it works out. And everybody's going to be scared, and they're going to be running into the gold market because gold... safe haven. Now, you Bitcoiners out there, maybe you guys will run into that Bitcoin market. I will be running into the gold market. Yes, clearly I'm a boomer, and a lot of people call gold, they call it a boomer rock. A boomer rock. I love that comment, by the way. And I'm a boomer, and I want a lot of those rocks. Anyways, I agree with Lizard King. When gold peaks, that's the time to start shopping for the houses. Right now, if you want to listen to Amy, who wrote that article for Yahoo, now is the best time to jump in, and you will not see prices this low in houses for a very long time to come. We'll see how it plays out. I'm Tall Mike. If you like this stuff, give me the thumbs up. Hit that subscribe button because it's a busy week. Here's what we got coming. We got the Federal Reserve coming out on Wednesday with their announcement. Now, we all know they're going to raise that rate 75 basis points, but we got a ton of earnings coming this week. Expect some volatility in the market, up and down, up and down. It's going to be exciting. Give me the thumbs up. Hit the subscribe button. Get out there, everybody, and have a great Monday. We'll talk again real soon. Bye-bye now.